Hello, everyone.
Hello, everyone.
So, today we're gonna do a quick introduction live stream about DRlens and DR Script. With me today is the person who developed DRlens. So, his name is Mage. You know him from the Discord and you know him from Twitter. And before we start, I want to say, most of the people don't know, but what we are doing in Academy or in general is not only a one-man show. It's not only me. There's on the journey since I released my first video on YouTube, a lot of people joined the course and a lot of people put a lot of hours of work and dedication in developing stuff like DRlens. So it's not only me who is doing that. There is 7 people now who are team DR and who are giving a lot of time of their free time to just help people to become better traders. So maybe give us a short introduction, Mage.
Hello, everyone. Yes, it's me. It's Meje, actually. I'm so glad to be here to proudly present my baby, which was developed thanks to the insight. I'm glad to present this beast of a platform, which looks fantastic. And I have to thank Dom from the Discord server. He gave the platform a fantastic look, but it's not only the look that is important. It's the look is amazing. We're really proud of it, but the statistical insights that you can gain from this one, I think it's awesome. Like giving access to everybody who don't have any coding skills and slice and dice the data however you want. For me, I'm really proud, and I already read so many messages of people loving the platform. So hopefully today we can showcase the power of the platform, the power of data. And if you guys have any questions, we're happy to go through the meaning. Make sure to read the introduction, the user guide that we posted in the DR Academy. And for the people who are not in the DR Academy yet, today is a good day to learn more about this platform, which we proudly produced and presented to you. And I have to thank Master for giving the insights and the inspiration, without his explanations. And, we spent a lot of time together. I was pestering him with a lot of questions on how do I calculate this? Do I calculate it from this line? Does this make sense? He spent a lot of time and patience, but the overall result, I think, he's also very proud. So we are here today to present this to everybody, and hopefully people will love it as much as we do.
Definitely, that was a quite exciting journey to start with you. And yes, I am very proud about the product we have here. And it's just giving so much more edge to the people who are trading and everybody who really wants to maximize his trading style and his trading results should always go back to data. So if you work in the professional industry, you will not find any trader there who has not either a data-driven or iconic-driven model which backs up his decision making. And that's the same way we are going with DR. I know a lot of people are happy about, I can smell where the market is going, or I can do this or that because I'm such a good trader. I can see what the market is doing tomorrow. Our approach is different. We are quantified. We are using a model with the DR, which is having over 20 years data. And we are basing our decisions on real-time data and on data we derivate out of, for example, DRlens. And in my opinion, and that's what I learned over 18 years, That's the difference between a professional trader and a retail trader. It has been the difference because we're going to change that. Because you're going to get not all the tools, but we already have given you so much tools, and now we are not just stopping. DRlens and DR Drive, it's just such an edge. And we are giving it away to you guys so that you can be more successful in your trading journey. So let's start talking about the platform age. So I am a new user here. Everybody can see my mouse, I think so. So the first time I come to DRlens, explain me, what do I see? I'm on the dashboard. I selected E-mini Dow Jones.
Yep.
So what can I do now?
Can you show how to use the drop down and show people how the data dynamically changes when you click something else on the filter on the left side?
Yes, maybe let's start with the dashboard. Explain the numbers a bit, please.
Okay, sure. So the first thing you see is it's the date. So you can see today is Sunday, January 15th. And if you check the platform tomorrow, it will say it's Monday, January 16th, right? Okay, so what happens when the date changes? Basically, the first dashboard that you see, Monday, well, today is an edge case because it's a weekend, so there's no trading today. But let's suppose that it's Monday and it's a trading day. Then the dashboard will tell you, okay, today is Monday. I'll show you all the statistics for every Monday in the last 20 years. So it would tell you how many times the DR was confirmed, because there are days where DR actually is never confirmed in the day. So where price chops around and never goes above or below DR. That is not a confirmed day, but as you can see from the stat there, 93.9% of the days in the last 20 years, there was a confirmation, either upside or downside. So the second statistic that you can see, the DR true percentage, that is the fundamental rule that you explained in the first video of the YouTube series. It's whether the DR rule holds true, meaning if there is a DR confirmation after 10:30 or after the relevant DR session, then price never closes below the opposite DR for the rest of the session. So this is the basic rule that hopefully everybody understands. And you can see without counting for any news days, it's still pretty high, almost 82% on Mondays. This is the percentage for Mondays. If the day after is Tuesday, then you will see the percentage for all the Tuesdays, and so on and so forth. The confirmation long, it tells you the percentage of days where the R confirmation happened on the long side. So if it's 100%, it means all the days were confirmed long. If it's 0, it means all the days were confirmed on the short side. And if it's 52.9%, it means it's slightly more on the long side than on the short side. It's almost like flipping a coin, but a little bit more skewed towards the long side. One important metric for me is the next one, the retracement into DR. It tells you the percentage of times the price came back into DR after a confirmation. So, which means you have a confirmation at some point in the day, either above or below. And after that confirmation, you don't FOMO, because if you see price running and you see it keeps going and you think, oh my God, I lost the train and price is running without me. No, you can see that this statistics, it tells you that 87% of the time, price will come back into the R range. So this for me, it's very important to keep in mind.
So
price had.
Sorry. So does that mean that we don't have to worry about when the confirmation is done, that we will have, whenever the confirmation is true, we will see a retracement with 87% probability? That's what you're telling me?
We will see a price touching DR again with 87% probability. Yes.
So that means whenever we are getting a confirmation, we have 87% probability that price will at least return to the DR high or low, depending on the day. Let's take
Yes.
DR high as an example. 87%. That's amazing.
Yes. And for Monday. And for Tuesday, it's a different percentage. But for Monday, it's 87%.
Are you telling me that these stats are also based on the day?
Yes, that's what I'm saying. And they're also based on the month, and they're also based on the week of the month, which we'll come back to that later. But
okay.
Yeah.
Wow, if I would not know it, I would be blown away, to be honest. Okay, sorry, go ahead.
Do you want to know more about the next one?
Yeah, like tell me. I want to know everything because I am somebody who wants to make a living out of trading. So yeah, I would be very interested to know what the next number is.
I think people will be excited about this one.
I have an idea what it could be, but like maybe we should not tell the people.
Do you think people know about the retirement setup?
Yeah, I think I heard about it. Yeah.
Yeah, it tells me something, but I'm not sure if people are really aware. But let's pretend that you have a confirmation to the long side.
Okay.
And let's pretend that price comes back to the low IDR.
Yes.
Roughly. Okay. So outside the R percentage, it tells you how many times price by the end of the day closes above the DR.
Mm-hmm.
So if there was a confirmation long and price retraces down,
yes,
it tells you almost 62% of the time by the end of the day, at the end of the day, actually, not by the end of the day. At the end of the day, the price will close with 62% probability above IDR high. About DR high.
Wait. That can't be. So, like, how many candles are you taking into consideration when we talk about the end of the DR session? Is it one candle or how many candles?
The highest of the last 3 candles. So the last 15
it means
minutes,
in the last 15 minutes. So that's like 3:45 New York local time, right?
Yes.
Okay,
and
so
I'm not taking the highest point. I'm taking the highest close.
The highest close. Okay.
Yes.
So we are not even talking about wicks. So we are talking about closing. So let me rephrase it. So we are talking about a setup. We have a confirmation to the long side, which happened during the day, right? And right now it's, let's say 3:30 in the afternoon. Yeah. And price is somewhere around, let's say the mid-level of IDR. So do you want to tell me that when this is happening at 3:30, it means that I have a chance of 62% that price will close above the DR high in the last 15 minutes? 62%. Are you sure you calculated it right? Because like, I mean, don't get me wrong, but like I mean, like I don't see that on my FX book. So no, just joking.
I'm pretty sure it's calculated right.
You know, like I'm making a little bit fun but I'm really amazed about the data we are giving to the people here because like for everybody to understand, we're talking about a 62% chance over every Monday in the last 20 years of data that if you in the market and you look at 3:30 and prices after confirmation somewhere below the DR high, it means you have a 62% chance that the price is closing above. Combine it with all the other data what you have, IDR true, confirmation long, etc., retracement into DR. This is data which is people in the chat, I thought, haha, master, you don't giving it away for free. Yeah, sure, I'm not giving it away for free. But like the price, which is included in everything we're offering in the academy, it's a joke. If you have any clue about trading, you will know that these data are priceless. Okay, perfect, amazing. Let's go to mean standard deviation.
Sorry, can I clarify
Yes,
just
please.
to flip it on the short side. If you have a confirmation on the short side and then
Yeah.
price retraces above, so all the way up to mid IDR or wherever it comes back into the R range, then there's still the 62% chance that price will close below the R low.
Yes. Okay.
So it works in both directions.
Of
So
course.
this,
Yes.
as we can see, this is for all the days, and we don't know the direction, but we'll come to the
Yes.
direction later. But this tells you there is a 62% probability that price will either close above or below, depending on the direction of
Okay.
travel.
Amazing. Let's move to the mean standard deviation.
Yes, the mean standard deviation up, it means on average what standard deviation is reached after confirmation, either up or down. So you can
Okay.
see this is interesting, but it will be more interesting once you know the direction.
Yes.
Because this tells you, for all the days, on average, price goes up to at least 0.5, in this case 0.7, and it goes down at least 0.7. But we will see that if we select the direction of confirmation, that will change.
Yeah, of course. But like in general, we can say that like we have in our script, we have the 0.5 standard deviation. So it means that 0.5 is definitely, no matter which direction we're getting confirmed, but it seems to be over 20 years, the low hanging fruit target, right? So it's like over 20 years, when I look at the stats from Monday, it always reached 0.7, either up or down, right?
Yes, correct.
Okay.
Correct.
Because somebody was asking in the chat, we are looking right now at ADR, E-mini Dow Jones data. Yeah.
Yeah.
Okay.
Correct.
So mean standard deviation is the same what we explained then, and now we have average confirmation time. Tell us about that.
This is very simple. It's the average time that price gets confirmed.
Yeah.
After the first hour of trading. So in this case, 9:20 for the ADR session. That's the average time of the confirmation.
Yes. Okay, perfect. So we don't have to go through all the numbers. So right now we have looked at every Monday of the last 20 years, right? So we have January. So that means January is all Mondays in January. Am I right?
No, it's all the Januaries.
Okay.
It's all the January data.
Yeah, I'm a little bit stupid. I'm working with my average book. Okay, so January means every January. So that's all the Januaries in the last 20 years. Fine. And then we have the seasonal dashboard, which is week 2. So that means then every second week in January for the last 20 years, right?
Yes, correct.
Perfect.
No, sorry, every second week of the month.
Yes.
Not necessarily in January.
Okay, so clarified, understood. Nice. You should be a teacher. I like it. On the left side, we have select instrument. So I guess I could change here every instrument just to show it to everyone quick. So we can go to NASDAQ and we go to S&P. We stay with Dow Jones. And of course, we will be adding like every other instrument from Euro USD to gold. All will be added with the time. So you will have access to 20 years of data for almost every instrument, which makes sense to trade with DR. And then we can select the range. So we can look at ADR data, we can look at ODR data, and we can look at RDR data, right? Correct. And yes.
Sorry, I just noticed because I'm watching your stream, there is a bit of a lag, but hopefully people can still follow.
Yeah, like they will get it. The lag is coming. Like we think we are talking, but they don't see us. Don't worry about that.
Yeah. Yeah, that's okay.
So, and the session filtering means like entire data set. So that means for 20 years, right? Then I can click on after chosen date, right?
Correct. Yeah.
And I can take the last X trading days. So actually I don't see anything here, by the way. Is it me?
You need to click the after chosen date and then something will appear.
No, it's not appearing. Maybe it's just on my browser.
Oh, maybe it's the font, you see. Maybe we need to change the font for that.
Yeah.
You see there is something
Yeah.
highlighting.
Yes.
You
Yes.
can
Yes.
type the date probably.
Yeah. Okay. So we stay with the entire data set. So now we are finished with the dashboard. So now I have this button over here with these distributions. So I click on that.
Wait, we forgot something very important though
Oh,
in the dashboard.
okay.
Because we only showed the data for all the days, meaning true and false days. But
Yes.
what about if you know that confirmation happened on the long side on Monday? What about
Wait.
getting more insights
I wanted to
into
be too fast. So
that?
true. I didn't see that. There's all days, and now we could look for. Let's go long. Let's check the long data. Okay. Oh, it's telling me it's weekend, so get ready for Monday. Yeah, I
Still can.
for the chat. Yeah, we have seen that. We're gonna fix that. There is something. I think there's the wrong color. We're gonna push the update on the live, so you will see entire dataset stuff. Okay, now confirmation long.
Yep.
So that
Okay.
means we have yes. So that means all the data we have been talking through. Right? Now only for days where there was a confirmation for long, right?
Only for Mondays where the confirmation was long.
I forgot about it. So Monday, confirmation long. And then I will get separate data between all days and confirmation long. So that means like technically, like it's tomorrow is Monday and the trading session starts and I get a confirmation long. Then I can switch on this dashboard to confirmation long because it's a Monday, right? And I have a confirmation long. Okay,
Yes.
so what should I look like when like there are differences in the data? So of course DR true is whenever it's true that the confirmation long will become true. The retracement into DR is also the same, so 87%, very high. So the first difference we have on outside DR, so this seemed to be go up because we were talking about 62%. And now on a long day, on Mondays, it seems to be 65, 56, 65.5.
65.
Okay. And the mean standard deviation is way higher than it was before.
Yes.
Like before it was 0.7. Now we know on Monday after confirmation long, the average standard deviation is 1.5 over 20 years, right?
Correct. And that's because the data, when you select all the days, true and false, the data is a bit too choppy. You are aggregating a little bit too many things that are different between each other. But once you select and you filter for days that are similar in characteristics, like all the long confirmations, then they're more you get a more meaningful standard deviation number, and you also get a more meaningful retracement number because you are filtering for retracement that happened in the same direction.
Okay. Nice. Okay. And now I see a data we have not seen before, a retracement before high of the day. What is this?
Yes, this is something that I realized when working on the data. There are different type of retracements. There is the absolute retracement that you have in every single day. So what is the definition of retracement? Do you know?
Again?
You remember? Did you write down the definition of retracement in your FX book?
No, but like I can't find my FX book. It's I lost it somewhere. You know, I'm a little bit old. Maybe you tell me the definition.
I'll refresh your mind on that. So if you have a confirmation on the long side, then the retracement is calculated as IDR minus the lowest price in the day divided by the standard deviation, divided by the IDR minus IDR high minus IDR low. But
that's
it's in the user guide. Hopefully people remember what the standard deviation is. So it's the range of IDR.
Yes, that I remember.
Yes. So you basically want to know how deep into IDR price comes.
Uh-huh.
And a positive number is there's no direction. So a positive retracement means that price actually came back into IDR.
Okay.
If it's negative, it means that price after price broke and went and it retraced on a negative number, it means it retracing above IDR high.
Okay.
It means it never comes back into IDR.
Okay, that's another amazing statistic point in my view.
Yes, and you'll see later when we switch to distributions that we will have some negative numbers, and then we will provide them maybe a practical example on a chart.
I will make it a little bit easier for the guys who are listening the first time. So that means retracement before high of the day. It means we have a confirmation, and before market is extending, like we're talking about the long scenario. So confirmation long.
Yep.
And retracement before high of the day means we calculate the retracement before the market is extending to the upside, before we see the high of the day. So in total, we can say we see a confirmation, we see an average retracement, and then we will extend to the upside. And this average retracement is 20% into the IDR range, right?
Correct.
So I'm not, now I get a connection timed out. Okay, that's,
hello?
No, not my internet, just the DRlens.
Oh.
So you can talk a little bit more about, I think like everybody in the stream tries to get on DRlens right now, and that's maybe...
So now I can see it. So this is really important because
keep on talking and we'll come back, don't worry.
Okay, let me switch it on my screen actually. Okay, so what were we saying? Retracement before the high of the day. So yes, as you said, this is the retracement calculated between a price confirmation and the high of the day. The absolute retracement, it doesn't count, doesn't matter when it happens. It just takes the biggest, most pronounced retracement that happens in the day. So that's the difference between the two, and that's why one is higher than the other. So one is the retracement before the maximum extension, and the other one can happen at any time. So usually it happens after the extension. That's why it's bigger.
Yeah,
and then we have
just quick, because somebody in the chat was mentioning that. So technically, it's true. It's not the high of the day. So we are talking about high of the session, of course. So we have to change that in the DRlens, because it's right. It's not the high of the day. It's the high of the session.
And it's the high of the post DR hour session. Because if the high of the day was during the DR, so like between 9:30 and 10:30, then this is not taking that point into account. Is only taking the highest point reached after 10:30.
Yes,
we'll make a note of that.
Yeah. Ralph, it's day. It's not the day. It's for the session. Everything is session related.
Yeah.
But of course, it could be also the high of the day. It depends on what the market was doing.
Correct. The last retracement that we haven't talked about yet is the last one. So the retracement after 0.5x, which is basically tells you how much price retraces after touching the 0.5 standard deviation. So if you have subsequent to price reaching a retracement subsequent to price reaching the 0.5 standard deviation.
Okay, we have screen again.
Clear?
Yeah. So let me see. No, it's like there's too much people right now at the same time. Like, could everybody...
It's working on mine.
Yeah, it's not working for me.
Yeah, okay.
Yeah, see, like I'm not a developer of this, so I don't have priority. Thank you very much. Yeah, I would give the screen sharing to Mage, but like he's connected, not connected with the OBS. Now we are back. Let me switch quickly to distributions, hopefully. Oh, it's not working.
Too much excitement. Maybe you can pull up the user guide that we prepared.
Now let me try it again. I'm sorry, guys, but like it seems to be too much traffic right now on it. I think like everybody's trying also to access it. It's not only the people who are logged in, because like we have people logging in all the time, but
yeah, I'm checking AWS. There is a big spike in users. Let me see if I can do something on backend. Because once we have a lot of traffic, then there should be
there
more
are new
deployment.
instances.
Yeah. Let me see.
Okay, it's coming back. Now we have it. Okay, good. I have a screen. So don't look at the data, guys. I have a screen back. So we go directly to distributions, and I'm not going to touch anything.
Okay, and it's still not loading on your stream, so
yeah, it should be. You can like talk with me, because like the stream is.
Yeah, I can see it now. I can see it now. Yeah.
Okay, so now, sorry guys for the interruption, but now we have a screen. I will not press anything. So if you don't see me pressing something, it's just because I want to make sure that we have a screen to explain. You can test it later in your own stream, in your own application. So now we are at distribution. So first of all,
this is where the magic happens.
That's where the magic is happening. Okay, tell me about it.
Yeah. Well, because I mean, the dashboard is your companion for the trading day. You know, you log in, you check the statistics, and then, you know, you have a confirmation, you click on the confirmation side, and then you see on more or less, you know, where, what you should expect for the day. But if you want to drill down a little bit more and be more precise, then you also have other data points that you could explore. Like, for example, if you have a confirmation at 10:30 or in the first half an hour of the session, then what about checking what's the average distribution for all the days which confirmed in that time frame? So you make it even more specific, you know, you make your data even more alike, you know, to your current session. Because you know, if you are like the general dashboard, you know, a confirmation happens on the long side. So you know the side is the same, but you don't know when it happened. Because confirmation, let's say confirmation at 10:30 versus confirmation at 3 p.m. is very different from what I observed in studying the data. So, you know, and hopefully people will explore for themselves. But then we created a graphical tool to show you visually, because a picture is worth 1,000 words.
You're running away a little bit. So let's start on the top. So
I'm so excited about the distribution.
Yeah, me too. I'm super excited about it. But like on top, very important to understand for the people. So on the dashboard, you see the Monday stats, you see the January stats, and you see the second week stats. But like, if you understand what we were talking about, you would ask me the question, where is my overall stats? So what are the stats If I don't care about Mondays, I don't care about if it's January or February, and I don't care which week we are in. And these numbers here on my screen, now, these are the overall numbers. So no day of the week filter, no monthly filter, no weekly filter, right?
Correct. Yeah.
So, and here I can now filter as I would like to filter. So now I can say I want to filter by day, I want to filter by month, or I want to filter by the week of the month, like we had in our example. So I'm not changing anything because I don't want the program to give me no
it's
screen.
Working on my side now. It's
yes.
working. So
it should be working, but like for the presentation, it's not that important. So we could go here now and we could say by day, and we want to see only Fridays. So if I would be preparing for a trading day, I would like say, okay, tomorrow it's Monday. So I would filter the data for Mondays, right? So just pretend I have filtered for Mondays, so my numbers would now change to only data from Mondays.
Yes.
So, and now we go to the next one, and here it's asking me, do you know already if the DR true or false? So I don't know that, so I leave it at all clear, right? If I want to test some model for whatever model I develop inside my trading plan, I could say, okay, I just want to see the stats for when the rule is true, right? The second, what we have is confirmation direction. So that I might know because like I might be trading now the ODR on Monday and I already have a long confirmation, for example, or a short one. And then when I have the confirmation, I can also select in which time frame the confirmation happened. So we have half an hour windows of time, which we can select. And based on what we are selecting here, I'm afraid to click it away, but I try it. So let's say we have a confirmation in the first half an hour of the session we are trading in. It's working for me. And we have a long day. Don't do this to me. Perfect. So long confirmation, ADR session, and the confirmation happened between 8:30 and 9 o'clock New York local time. So now I see for this, let's be really brutal and take also the day into consideration. So now I also selected Monday. So the data I see now is based on the selections I took, right? So these data up here are now filtered by Monday, by I don't know if it will be a true or a false day, by long confirmation, and the confirmation happened between 8:30 and 9 o'clock. So all these numbers are now for a very, very specific case. And this is like, I really hope people understand what we are giving here. It's mind-blowing. Look at the numbers. Like every trader, everyone will explain to you, statistical edge when you're taking trades is you can't beat it. Every algo in the world who is making price or trying to make price is only using one point, and that's data. There is no algo in the world who is considering whatever, how the queen is feeling tomorrow. She's not there anymore, sorry. That's all what counts. And imagine if you come to a point where your mind and your psychology is able to capitalize on these data. These are 20 years data, guys. 20 years of data. You are doomed to make profit. People laugh about me when I say that, but that's what is happening. If you're able to transform your trading into quantified strategies with data which back you up, you will gain confidence and you will take trades which are over 100 trades. You're gonna be making money. It's unavoidable. Nobody can stop you. Nothing in the world can stop you. Because that's just facts. Sorry. So now we have all the selection here. And now I see median standard extension, standard deviation extension. Hello?
Correct. Yes, I'm here. I'm just
I just took
listening,
you
and
away with
I'm so
my
excited.
motivational speech.
I'm so excited.
Yeah.
I'm so excited.
So
I
median
hope people
standard.
are as excited as we are.
And everybody here is how fucking excited. Oh, sorry, I am. So, but median standard extension means what?
It's like the stats we showed in the dashboard before,
Yes.
but it tells you the maximum extension that you reach in these specific days with these specific filters. And by default, the chart that you see below, it's standard extension distribution. So if you click on it, it's not going to change.
I click standard in this one because it's already standard max extension. Okay.
Yes. So if you click the other one.
Yes. No, we are not clicking anything right now. So let's have a look at this beauty. Yeah. Because I love stats. I love numbers. This is just amazing. So I have brought down the statistics from 20 years data into such a time frame where I'm right now trading. So I trade the ADR. It's Monday. I have a confirmation long, confirmation of the time was happening there. And now I get a standard extension, standard deviation extension distribution. What does a distribution means? So what you see here, guys, is how many times over the last 20 years on Monday in the ADR session with confirmation at 8:30, 9 o'clock, how many times price went to 0.4 standard deviation, 0.6, 0.8, 1, etc., etc., etc. So if you have been paying attention to distributions in math, in whatever class they teach it, like in Germany, like around 8 to 10 grade. So you would know that we were looking like normally we have a Bell distribution. So, and that's what we see here. So we can see based on this graphic that most of the distributions were happening around the 0.8 and 1.2 standard deviation level. So when you look for a target, so let's say you took a long trade and you're looking for a target, that means like this area between 0.8 and 1.2 is a very, very low hanging fruit, right? And you wouldn't see that if you look at the median, we are at 1.3 because the median of all these numbers. But when you look at the graph, you're looking where is the bulk of standard deviations. So everybody should understand what this means. I mean, you can't drill it down more. Show me any other system. Show me anything which can do that for you. I don't know it. I have not seen it in the retail market. It will be not there because it's just not existing yet. And I'm not saying that because it's the academy. It's just facts of what you're getting here. It's just like there is no price tag to put on. So then we have the same. We don't only see the standard deviation extension. We can also see the maximum retracement distribution, right, Mage?
Yes. Yes.
Okay, let's click this.
And here we can see the negative numbers. Finally.
Yep. And again, mine is not working. Yeah, here we go. So now, as it should be, we see that the maximum retracement from 0.4 median would be this. That's the median. But we definitely see that the bulk of the standard deviations on Monday's IDR with confirmation at 8:30 to 9 o'clock will be around this standard deviation. So 0.2, 0.1, 0 till 0.1, and then into the minus area. Like there is a bulk distribution. So again, We even can say, based on statistics, where we would expect a retracement is going in the ADR on Mondays and blah, blah, blah. Don't say it again. Is that right?
Yes.
Cool. Okay, so
That's
now
awesome, right? I mean,
I'm blown away, but like, okay, I can stop the acting now, but I hope everybody understands what these data mean and like why we are doing this stream. And there is no shame in having some fun, because life is all about fun. But like, being in the position to show you something like that, I personally would have not dreamed about that like 6 to 8 weeks ago. Because we literally started from the sketch and everybody thought, yeah, Master brought out a DR video. I know about all of this data. But in this short amount of time, making it in such a way for you usable, most people don't understand when they talk about $20 or $30. Listen, there is like hundreds of hours of work for everyone who wants to learn. And like, it's not me, it's about other guys. Of course, I helped, I gave the direction how to develop it, but I was not doing any coding for this. It was literally Mage who did all of that. And people like him are just amazing. He approached me, told me, hey, Master, I have this Excel file with 20 years data. What can we do with it? And look at what is the result out of it. This is the result of simple 20 years of price data he purchased, not even in mid-October. And the value you are getting as a trader from it, it's just, I don't know. I don't know what to say. You see it by yourself. I don't even have to exaggerate anything here, because everybody who understands trading will understand what I'm saying here and what you are seeing on your screens. It's just amazing. So then we have median retracement before high of the day. Okay, we have to name it high of the session and low of the session.
Yep.
So what does that mean?
It's, as we explained before, this is the retracement that you should expect before the maximum extension in the day. So you can see that it's usually smaller than the other retracement, which means before price reaches the maximum of the session, you should expect a lower retracement, which also tells you that if you already have a 0.5 retracement, maybe you're not going to see the high of the day, or maybe you already saw the high of the day.
Mm-hmm.
Like this is also an interesting insight if you think about it.
Yeah, because, definitely. Yeah. So, say it again, please. Obviously, well, I think like there's so much gold already just in explaining it. Say it again, please.
Yeah. So if you see that the median retracement before the high of the session or the low of the session is very low, and you are in your session, the live trading session, and you see the price is retracing to 0.4, 0.5, then you look at the distribution, you see, oh, actually the distribution tells me that the retracement is very little, even negative sometimes, or most of the times, before the high or the low of the session, which could tell you that maybe you already saw the high or the low of the session. If you know what I mean.
It's amazing. It's like not only what you said, and I hope everybody understood what he explained just to you. So you can make conclusions about how to take a trade in a certain situation based on statistical data. Again, this is huge. And if you want to become a professional trader, if you want to become profitable on a long run and consistent, this is where you should put your eggs into. Not like DR or Academy. I mean, that's more a general sentence I can tell you. If you ever want to become a successful trader, long-term, trading real money accounts and making a living out of it, your model has to be based on statistical edge and numbers. Everything else will fail. If you think you can read the market, go on. We'll talk again in 10 years. So this is amazing. And for the same statistic, it's the same. So when you see the distribution and when you're using your DR lens, look at where are the standard distributions. So the graphic is mainly there to tell you in which area there is a cluster of distributions. And that's something which you can also use where you want to enter, where you want to take a trade. And you will see later when we talk about Drive, how to use this data, because everything, we are going pro here. So these data you later can use in your DR Drive, and you just put the data in and the script will show you everything you need to know. You will have a line there. You will see exactly. You can use this to really create a HUD for your trading. And this is amazing. And let's look at the last point, which is C after 0.5 distribution. So I guess that's me. How is the distribution after we reach the 0.5 low-hanging fruit target, right?
Yeah, correct.
So again, we get another data point where we know after hitting, how many times you have seen this in the last 3 weeks when you were following price? Very often price is reaching 0.5 standard deviation in one direction, and then we see retracements, and that's literally the graph you're getting here. So once price has hit 0.5 standard deviation, the retracement afterwards will be in this bulk on Mondays, confirmation 8:30 to 9 o'clock, blah, blah, blah. So in this area where my mouse is, from minus 0.4 up to 0.4, that's the max. There is the bulk of distributions. So if you want to take it even more, this is a function you can also press here, by the way. So this area here, we have two areas where a lot of areas where we can take a trade in. So this is from 0.4 to 0 retracement. And then we have another one from minus 0.2 up to 0.5. So now think about it. Use it like, you know how much I like volume imbalance. You know how much I like gap imbalances. So you look at your data and let's say you see this scenario, and then you see in this area where you expect the retracement to be going to, there's also volume imbalance. Maybe there is a level from the previous DR session which is matching, like magically aligning with this area. You understand, it's so much conclusion. A lot of people are asking me, and Nindo is one of them, like how sometimes like it looks like I'm taking entries which are unnatural. But now that everybody sees and I can talk about it, that's what I'm using. I'm using data to verify entry levels which are giving me a statistical edge. And most of the times, when you have seen me trading, I am having entries which are like literally surgical. I'm entering the market in a level when my trade is working out, I'm not getting touched anymore. And I can work with like tight stops if I want to. But now everybody sees what we are doing and everybody knows where I'm basing my decision making for trading. Before I was like, it was just looking, he's just doing that, whatever, 20 years experience. But no, it's not that. It's the combination of using statistical data for my statistical advantage, combining it with what I taught you in the DR model and combining it with volume imbalance or whatever you want to use. You can use fair value gaps. You can make the same example for this data with a fair value gap. Look, if there is a fair value gap exactly at this standard deviation retracements, and then look how the price is acting there. If you see a rejection from these areas, you know you have a very high chance that the price will go to the other side again. And that's what it's all about.
Amazing.
It's all what it is all about. That's all about trading. Using your statistical advantage to gain advantage for your money. Because at the end of the day, there must be a decision. At one point, you don't know what the market will do in the next 15 minutes. It's always, that's why it's called speculating. You're speculating on a certain scenario to come. And if you ask myself, and I think I can say this with 18 years of professional experience, it's just very simple. If I speculate for something, I want to have a statistical edge on my side. And that's exactly what this is giving you. And this is the next step of evolution compared to what I showed till now. Because like this is now explaining why Master is taking some of the trades he took. Because I know the data. I have known them before DRlens, and now everybody can know them. And I'm going to teach every single one of you how to do that. And trust me, if you can follow rules and if you can follow the frame set I will give you, I am 1000% sure from the 500-600 people we have in the academy, after 6 months, 80% will be profitable. I bet on this. I bet. Sorry.
Mm-hmm. And I think there is a last hidden gem that maybe people didn't catch. But if you see in the statistics above the chart, there is also the max extension median time. And that tells you exactly that. It tells you on average when was the high of the session or the low of the session reached. So this is another interesting data point for people.
What? Say it again, please.
The max extension median time, it tells you the average time when price reached the high of the session or the low of the session, based on the filter you applied.
Ah, wow. So I'm getting, like, let's go back where everything started. Back in the days, somebody said, I had the idea, price and time. Time and price? Time and price, price and time. You know what I mean. So
indeed, yes.
We have price. We have statistical price data. We have time. We can DRlens, it's just a magical book. That's what it is. Of course, if you just look at it like it would be a comic book and you just think, wow, nice picture, nice drawings, funny, haha, then it's not going to help you. But if you read it like a book and you study it, this is going to be a game changer for you.
I'm even more hyped now after listening to you. I didn't even realize how powerful I made it.
Okay, maybe
Can I give a quick shout to my partner who helped me with this, Hillary?
What you're telling me? There's another person working for everyone? How is that possible? Master should do everything by himself and dare him that he would charge anything for it because like he's gonna take the money and make a big party in Dubai. Yes, that's what I'm here for. Yes, please.
No, let me give a quick shout to Hillary, my friend who helped me with this, because until 2 months ago, people should know that I didn't even know how to write a single line of code. I learned a lot in the last 2 months, but to manage all the infrastructure and give access to 600 people in 24 hours and all being live at the same time on this without too many glitches. I mean, we had some glitches, but we're not a tech company. We're just two people taking time out of our job and making this available for everybody. And I'm so proud of what we achieved. And hopefully people will appreciate it. But thank you, Hillary, for helping me and making this possible.
Amazing. Cool. Okay, so I think maybe like 3-4 questions for people about DRlens, and then we're gonna switch to Drive. I think we have to wait for a second till the stream is catching up. By the way, for the live sessions in DR Academy, we're gonna have, and I'm happy to announce that, but we're gonna have Vimeo enterprise solutions. So that means we're gonna work off a low latency stream for everything what we are doing. And I'm super excited because like there's one thing which I really like, and that's quality. I love quality, and everybody working with me knows that. So I'm super excited to do that there also. Okay, I'm waiting for the questions to coming in. If I am long, their rule has to be true, right? Or I'm missing something? No. What do you mean? You have a probability. If you are long, DR rule has to be true. You're missing something big time, I think. What happens if you hit true or false in the scenario you are showing? How does this affect the scenario? So what if Fario, like then I'm having just a false day. So you see, it's 82% that it will be true for a long day. So if we close below the other side of the DR, just shake a head for a second, take 1 hour minus and go next. I mean, I don't see any 100% number. And if you're looking for 100%, and if you think that you can ever reach that in trading, it's not going to happen. Sorry to break it down. But 100%, I mean, these numbers are already extremely high for trading. So once you have a day and you lose because it's breaking the rule and you can only trade the rule, then it's just what it is. You take 1 minus R and you move on. That's simply what's happening. So in this case, how to exactly read the negative numbers again? Mage, maybe you want to say something about it?
Yep. Negative numbers for retracement, right?
Yes.
Yeah. So if you have a negative retracement, it means that price never retraced below IDR, because the retracement is always calculated from IDR.
Yes.
So it means let's make it practical for people. If you have a confirmation long and price reaches a 0.5 standard deviation,
yes,
and you have a negative 0.2 retracement, it means that price never comes below IDR high,
yes,
but actually it goes above IDR by 0.2 standard deviation.
Yes.
That's the lowest point you touch.
To draw a picture for the people who are listening in their head, so in this example, this one we are looking at the after 0.5 standard deviation. So you have your DR line and there is a DR high. And above the DR high, you will have your 0.5 standard deviation. So once 0.5 standard deviation is hit, it means literally 0.0 number till 0.5 retracement. Like this area means we are having a retracement between the DR high and the 0.5 standard deviation. And the next cluster means from here to 0.5 of the DR range. It's very simple. We will show some charts, but like this is only an introductory video, and we will cover this. Trust me, there will be a day when you wish we are not talking about DRlens, because this will be part of the daily training, of the live sessions and everything. This will be your bread and butter. So this was just to give you an insight that you can play a little bit with it. And of course, in the academy, we will go over that till you can't see it anymore. I swear to you guys. You're going to be hating DRlens at one point, but in a good way.
I hope not.
Yeah. Okay.